Welcome to Buy, Hold, Sell. My name's Matthew Kidman. Today I have Ben Rundle from NAOS and Ben Clark from TMS, and we're going to talk about the top performing stocks from the top 20 on the Australian market today. Ben Rundle, Centre Group, big REIT, did really well, up 60-70%. Buy, hold or sell?
I think it's a hold at these levels. It's the best shopping centre assets or collection of assets in Australia. I think they've done a great job in removing some of the lower quality assets and redeploying those funds into the higher quality part of the business. I don't see a near-term catalyst for it to go down that quickly, but it is priced for perfection, so I'd probably say hold at these levels.
Ben Clark, we keep getting yield compression. REITs keep going up. Centre, buy, hold or sell?
I'd have a sell on Centre, Matthew. I think on a 3.6% forward yield, you wonder how much further that can go down. And I think it doesn't have the development pipeline that a Westfield or some of the other REITs have got, so I'd probably sell that stock.
All right, the only thing better than REITs is infrastructure, transurban, the granddaddy of them all. Buy, hold or sell?
I'd have a hold on this, but it wouldn't be far off being a sell either. You know, again, it's on a yield of about 4%. I guess the difference with Centre Group is that they are able to get that distribution growth a lot stronger than Centre Group are. They've got a better development pipeline, but they do have a lot more debt on their balance sheet. This will be a stock that will turn when those bond yields start to kick up.
Bond yields may never kick up. Yeah. Ben, so is transurban a buy or sell?
Yeah,
or a hold?
Look, I think it's a sell. And your point about bond yields, I'm reading things in the press about how it's a new normal in terms of the environment, which that sort of phrase scares me. And I think with bond yields, I don't see a near-term catalyst for them, to go back up. But I do think there's a risk, and you certainly don't want to be in transurban or anywhere near it when that happens. So it's a sell for me. All
right, let's go on a global shopping trip. Westfield, buy, hold or sell?
I actually think it's a buy. So what Westfield have done really well is actually clean up a lot of the lower performing assets, and they're redeploying those funds into the development side of their business. Now what happens when you do that is you're pulling out near-term earnings, so the stock looks expensive when you compare it to the US peers. I think you'll start to see those development profits come through. The Lowies have obviously decided they need to be in the absolute A1 location for shopping centre assets, and I think once they have the portfolio all said and done, it will get taken out by one of the guys over there, so it's a buy. I think if you put it in the bottom drawer and leave it there for a few years, you'll make money from it.
Okay, Ben, Westfield, buy, hold or sell?
I'd have a hold. I think it's probably the REIT that you still want to own in a portfolio. I agree, it's got a great development pipeline, a great management business that's bundled into the passive property business, and you've got the best guys in the country managing, or arguably in the world.
Okay, movement of goods, pallets, Brambles, buy, hold or sell?
Yeah, I'd have a hold on Brambles. This is one blue chip that does have some earnings growth, probably high single-digit earnings growth. New CEO's done a really good job at turning this company around. I think it's one you try and buy on the dips, Matthew, and you get those occasions, and you have over the last 6 months or so. But yeah, hold for now.
This isn't a yield compression story. It's a global growth story, typically. Buy, hold or sell, Brambles?
It's a sell for me. Yeah, it is. It has been a global growth story. What worries me is about 10% of their earnings come out of the UK and about 25% out of Europe. I think if you see a rise in the cost of goods throughout Europe, which I believe will happen, you'll probably start to see some impact on volumes. It's priced for perfection, so I think at the current levels it's a sell.
We typically hate conglomerates. Westfarmers has been the exception over the year. Buy, hold or sell?
I think Westfarmers is probably a hold. I mean, it's sort of been in that trading range between 40 and 45 for about 4 years now. You're starting to see the margins in the Kohls business come back a little bit. The business is being held up by Bunnings, and offshore they can probably turn their hardware business that they acquired around. But it's priced very finely, so it's probably a hold. I don't think there's a near-term catalyst for it to go down.
Got a lot of businesses, hard to see what will turn the dial.
Yeah.
Buy, hold or sell?
I'd have a hold on it, Matthew. I think the dividend yield's good. I don't think you'll get a lot of growth out of it. I agree, I think Kohls has probably had the 5 easy years of that turnaround story, and there's signs that Woolworths is slowly starting to turn the ship in the right direction. One possible bright light this year could be the coal division, which of course had a couple of horrible years, but we are seeing coal prices turn, and that could become quite profitable quite quickly, so I'd have a hold.
The stocks that gave us a bit of a nosebleed last year might not be where you want to be in the year ahead.